Hello everyone. In this video, I want to walk you through my top dividend holdings in my Robinhood portfolio and show you exactly how much dividend income I've generated so far this year. If you are new here, a quick context. This is my public Robinhood portfolio. I share monthly updates, all my recent buys and sells, and more importantly, why I'm making those decisions. So if you value transparency and learning through real examples, definitely consider subscribing to the channel. Alright. My total dividend income for 2025 is $2,367, which works out to about $197 per month or roughly $6.50 a day. And a few days ago, I did post a short video where I mentioned that the number was around $7,000 and that was incorrect. I had a calculation and formula error in the Excel sheet I used to track my dividends. I didn't want to just move on without correcting it. So I wanted to be transparent and clear that up first. That said, I'm still genuinely happy with this result because I only started this portfolio this year and this feels like a solid first step for me. And if you have been watching my portfolio update videos from the beginning of the year, you already know how this portfolio has been built. Step by step, nothing fancy and nothing hidden. Alright, now let's get into the actual topic of this video. I want to focus only on my dividend positions today and break down exactly what's generating that income. So let's start with the ETFs I have first. I currently hold 4 ETFs in this portfolio: SCHD, SCHG, JEPQ and IBIT. Since IBIT doesn't pay any dividends, we'll keep that one off this list in this video and focus only on the income generating ETFs. With that said, let's first focus on SCHD, which is Schwab's dividend focused ETF. I currently hold 320 shares of SCHD at an average cost of $27.43. I invest in SCHD every single week. I have my recurring investment of $50 per week set up, which usually gets me about 2 shares. On top of that, whenever SCHD drops below its 200-day EMA, I also buy in chunks, sometimes like 25 shares or sometimes 50 shares, depending on the price action. SCHD holds 103 companies with heavy weightage toward energy and consumer defensive names, which means this ETF will hold very well during market downturns. And it has a dividend yield of about 3.82% and a very low expense ratio of 0.06%. And recently, I received $87 in dividends just from SCHD alone when I had 312 shares. That number will only keep growing as I add more shares. Since inception, SCHD has delivered around 12% returns, which is honestly very decent considering how low volatility this ETF is. It may not beat the S&P 500 though, but that's not its job. SCHD brings stability, it brings predictability, and most importantly, it brings consistent long-term passive income. It's been pretty flat this year, and that's exactly why I like it right now. Remember, every ETF and every stock has its time. Right now, AI is hot, growth is running hot, but when that cycle cools down, SCHD will quietly move higher. I genuinely believe this ETF will trade in the $40 to $50 range in the future. So this is just an accumulation phase and I will continue to buy in. Alright, moving on to the next ETF, which is JEPQ. This ETF tracks the Nasdaq 100 and it currently has 108 holdings with about 52% weightage in the technology sector, which is massive. There are 2 reasons why I have JEPQ in my portfolio. Number 1 is its growth and second is the income. It offers around 11% dividend yield with an expense ratio of 0.35%. My buying strategy here is very specific. I only buy JEPQ when it pulls back to either 50-day EMA or the 200-day EMA. Right now, I'm up about 8% and I reinvest every single dividend. That reinvestment buys me more shares automatically, which compounds beautifully over time. And I recently received $52 in dividends, and the best part is JEPQ pays monthly. Monthly dividends are extremely powerful when you are thinking long-term compounding. Next time, when Nasdaq drops 10 to 15%, I plan to buy another 100 shares in one shot and hold on to it for long term. Alright, now let's talk about SCHG, which is more on the growth side. I currently have 372 shares at an average cost of $25.70 and I'm already up 28%. Even though I built this position only this year, I'm outperforming the S&P 500 by almost 2 times, and that's exactly because of the timing. I bought heavily during the April sell-off and that paid off. SCHD has 198 holdings with about 45% exposure to technology, and it does have a small dividend yield of 0.34%, and it has a super low expense ratio of 0.04%. And recently I did receive $11 in dividends, which is negligible though, but every single dollar counts. There is an overlap between SCHD and JEPQ, and I'm completely okay with that. I understand the risk and I'm okay holding both the ETFs in my portfolio. Alright, those are my dividend ETFs. Now let's move on to the individual dividend stocks, starting with Proctor and Gamble. This is my newest addition to the portfolio, and I currently have 30 shares at an average cost of $145. Procter and Gamble has a dividend yield of 2.89% and is currently trading near its 52-week lows. Procter and Gamble is one of those companies where uncertainty is almost zero. They sell consumer packaged goods, things people use every single day, and almost every household in the world touches a Procter and Gamble product in some way. Market cap is around $338 billion, and this company has a massive economic moat. Here's something interesting though. If you bought Procter and Gamble in 2020 and held it till now, you basically made nothing in terms of price appreciation. And that's actually good news for someone like me buying today. On the weekly chart, the price is roughly where it was 5 years ago. That tells me downside is very limited and upside is much more likely from here. Alright, next up is Target. Target is a retail giant similar to Walmart, but the economic moat here is much weaker and uncertainty is higher. Because of that, my plan is to sell this position and move that capital into Procter and Gamble. That said, for anyone considering Target, it offers around a 4.5% dividend yield and is trading at a very low valuation. I don't see a lot of downside from here, and for me, this is purely about simplifying my portfolio and building more concentrated, high quality dividend positions. Alright, next up is LTC Properties. This is hands down one of my favorite REITs. LTC focuses on senior housing and healthcare properties, and it offers a 6.6% dividend yield. I have been accumulating more shares recently, especially after the price dropped below its 200-day EMA. It pays monthly dividends, and I'll be receiving around $67 this month alone. Recently, LTC made acquisitions in Tennessee and Wisconsin totaling $63 million, and they plan to close another $110 million worth of shop deals in January. All of this sets the stage for the stock to potentially move above $40 in 2026 while continuing to pay consistent monthly income. Next up is Coca-Cola. Similar to Procter and Gamble, Coca-Cola has a massive moat and very low uncertainty. They have a market cap of around $300 billion with a 2.88% dividend yield. I recently received $26 in dividends from my 51 shares, and I'm patiently waiting for the price to drop below its 200-day EMA, which is around $68, to add more shares. This is a long-term hold for me, which will be slow, steady, and reliable. And the last core dividend holding in my portfolio is Realty Income. I hold 72 shares at an average cost of $55. This is another rate similar to LTC Properties, but more established and diversified. They have a dividend yield of around 5.6%, and it also pays monthly. That said, I don't want too much rate exposure in the long term. So sometime in 2026, I'll likely sell either Realty Income or LTC Properties to reduce that exposure. But for now, I'm reinvesting those dividends and letting it compound. Apart from these, some of my growth holdings like Broadcom, Lam Research, and Google also pay dividends, but those yields are very small, less than 1%. So I don't count them as core dividend positions. So that's the full breakdown of my dividend portfolio. Now I want to hear from you. What dividend stocks or ETFs would you add that have a wide moat, low uncertainty, and are trading at attractive valuations? Drop them in the comments below. And also share what dividend holdings you own. It helps everyone watching learn from each other. And if you found this breakdown helpful, make sure to like the video and subscribe to the channel. Thanks for watching, and I'll see you in the next one.